Hi, Clayton. Really enjoy your show. My question is about buying a second residence or rental property. I live in a very expensive metro area and I commute almost 2 hours each way.
Ooh.
After COVID is over, my employer will open their office and we will be back to face working in the office. To save on the commute, but also to invest in a long term rental property, I am considering buying a small apartment or townhouse in the city. I would like to get your advice on how to find such a property when the market is high and properties are very expensive. I have about $50,000 to $100,000 to put as a down payment, and I plan to at least work for another 10 years in this area. Thank you in advance for the guidance.
Thank you, Michael, for the question. That's a tough one. I mean, I always use down payment frames of reference for like at our company at Morris Invest. So like the minimum down payment for one of our rental properties is roughly in that $45,000 range. It's going to get you, a cash flowing rental property from day one that's already cash flowing. So that's basically getting two of those, right? Because you have 100,000 to work with. So I use that as a frame of reference. That will give you a fantastic internal rate of return, cash on cash return or internal rate of return, because you'll be using financing with incredibly low financing right now. So that's my basis. I'm thinking, okay, 17, 18% internal rate of return on a purchase like that using $100,000, two down payments. That's right where my mind went. Okay. So then let's go to an expensive metro area where you're going to use $100,000, probably the whole amount, as a down payment on a rental property. But I'm not quite sure I understand, Michael. So you're mentioning it's a 2 hour commute, which I totally understand. I totally get it. We have a lot of California investors that invest with us because they want to get out of that rat race. They don't want to be, doing that 2 hour commute, and I get it. But are you intending to sleep there yourself, like during the week or something, so you're closer to your job, and then on the weekends you'd go back home? In which case it's not a performing asset. It's now you're living in it, and it's a second home. So I guess I'm a little confused as to what your goal is. And I'm happy to follow up if you want to call in again and leave a voicemail. I'm happy to follow up on this, Michael. But my thought would be, can you grin and bear it with the house you live in now? And if you're going to continue there for 10 more years, or can you move closer, sell the house that you're currently living in to be closer? But for you to get a rental property, because you said rental property, but it sounds like you're going to be living in it in the city so you can be closer to work as an investment, just doesn't make sense to me. It really doesn't. If anything, what I would consider doing is, if you need to be closer because you don't want to do that commute, I would consider investing in other markets. Okay, buying rental properties like I just mentioned, getting a great cash on cash or internal rate of return or a cash on cash return. Now you're producing $3,000, $4,000, $5,000 a month in cash flow from your investments in other markets. Forget this expensive city thing we're talking about. Using that cash flow and maybe getting a rental apartment in the city, and using that cash flow, maybe you can get a rental apartment for $1,500 a month if you want to like sleep there during the week because that commute is killing you. Use the cash flow from solid investments, not a crazy inner city investment. Because when you pay more than a certain threshold, the internal rate of return is not going to be there. Like California prices, like if you're going to try to buy a condo, it's just not going to be there. It's going to be a negative return on investment. I just think you'd be making a mistake. So I would think about using that 100,000, placing that in more intelligent real estate, using the cash flow from that real estate to pay for maybe a rental apartment or a small studio apartment if you need to live near. Now, I lived in Manhattan. A lot of people would do that. They had their main home Like, David Letterman, he had his main home in New Canaan, Connecticut, beautiful home, but then he had an apartment in Manhattan where he would stay during the week during the show. Same thing with Bill O'Reilly and all those guys. Sean Hannity, they have an apartment in the city, and they had their main home out in Long Island or the Hamptons or Westport, Connecticut, etc. But they didn't buy the apartment. They would just rent it in the city. So I would think of that. I think if I follow you correctly, Michael, that's kind of where my head would be at on that. That's what I would do personally. And that's what I did when I lived in Manhattan. I took my money and I made down payments and bought properties in the best rental markets in the country, like where we build our properties in West Texas and so forth. So I just would think maybe a little outside the box on that. I hope I got the wheels turning here for you. If you have any follow-up questions, more specifics, I'd be happy to answer it here on the show. So thank you, Michael, for that. If you have a voicemail question you'd like to ask, again, go to our website, go to morrisinvest.com/Clayton. And again, while you're there, grab our 90-day Financial Freedom Bootcamp. Again, we put a lot of work into this, and it's totally free. Download the PDF. It's like 30 pages or so, and we take you through week to week to week, and we're going to make you do homework. We're going to make you put stuff on a calendar and really map out your financial future, and I think it'll be transformative. We've had thousands of people download our bootcamp, and they've had unbelievable success. So take advantage of it. It's totally free. We built it for you. We want to see you succeed. Thanks, everyone. Now go out there, take action, become a real estate investor. I believe it's the #1 way to build wealth. We'll see you next time, everyone.